for the benefit of PPP projects. Multilateral agencies have been allowed to raise rupee bonds and carry out currency swaps to provide long-term debt. 100% income tax exemption for 10 years, out of 20 years, or say 30 years, although it has been negated by minimum alternative tax norm. Use of FP reserves, offshore SP by IRCL. Now, norms of raising external commercial borrowings have been eased. FDI or foreign direct investment up to 100% permitted under automatic route. Tax-free infra bonds have been allowed. Government encouraging infrastructure debt funds. There is takeout finance by IIFCL. Now, the recent trends in financial structuring is very important. There is a shift from asset-based lending to cash flow-based lending. That is very important in PPP projects. Now, there is the securitization of future cash flows, future receivable funding, escrow arrangements, structured finance. But there are big constraints in financing of particularly the PPP projects. The concession period of PPP projects is of long-term duration, say up to 30 years in many cases. But the finances are available to the concessionaire for a maximum tenure of say 15 years. Even 10 to 15 years duration loans lead to asset liability mismatch for the banks, as most banks deposits have tenure of 1 to 3 years. Many banks have started reaching sectoral exposure limits also. Naturally, the major source of PPP funding has been the debt by the commercial banks, and many of them have already started reaching the sectoral exposure limits. IRCM has come out with takeout finance, but due to constraints on maximum debt by IRCM, interest rates, tenure limitations, and other issues, takeout financing is yet to pick up. In PPP projects, we don't have tangible security. That's a big constraint. The lending is non-recourse or limited recourse, and the lenders can only be repaid from the revenues generated by the project by your tools. Refinancing has not been adequately covered in the model concession agreement or most of the executed concession agreements. Mechanism of toll securitization is not very clear in the concession agreements. Whether toll revenues can be put as security for securitization or financing is not very well defined. Many times authorities' project cost is not in line with the market practices and actual costs. This leads to a lot of issues. Debt due is limited in case of termination to the authority's total project cost, while actual debt may be more. The biggest and probably the most important constraint is the lack of accurate traffic forecasts, both from the authority and from the concessionaire side. Corporate bonds, though a good source of finance,